thank you for everyone for being here. Thank you for the panelists. Just quickly, this panel is about the folks that are working in the trenches, truly getting their hands dirty in connecting the different pipelines and platforms to make sure their clients are well protected. They're fighting the good cause against, well, not against, with other players in the market, with regulatory agencies across the world. And I'm very happy that you're all here so we can hear from you. I'll let you introduce yourselves, start in this order.
Sure. Jeff Horowitz, I'm the Chief Compliance Officer for Coinbase. Been there a little over a year. Prior to that, I spent 12 years at Pershing, the largest clearing broker-dealer, as their Global Head of Compliance, CCO, and Global Head of AML, and spent other years in global investment banks, Goldman Sachs, and Citigroup. So happy to be here.
Thank you.
Yusuf Hussain. I'm going to be wearing two hats here. I am the head of risk at Gemini, but also recently appointed the board president at the Virtual Commodities Association, which is looking to become an SRO for the crypto industry. Spent about 7 years, the majority of my career at Goldman Sachs within the risk division, and about 6 years at Ernst & Young within risk as well.
Hi, everyone. I'm Christina Spiliakos. I'm Assistant General Counsel and Head of Regulatory at Circle. I started working at Circle around 5 years ago in 2014 when we first launched our Bitcoin payment app, and there were a lot fewer financial instruments that you could probably consider a crypto asset to be. And so have quickly accrued different regulatory frameworks over time and had to adjust to the new use cases for the assets quickly as Circle built out its business into multiple business lines outside of just payments. So prior to Circle, I worked in the U.S. Senate and Massachusetts State Treasury.
My name is Greg Lisa. I'm a partner at Hogan Lovells. Been there for about 3 years. Before that, I was about 17 years in government. I played cops and robbers with the Justice Department doing organized crime and money laundering cases. From there, I went to the CFPB during the startup phase for about 2.5 years in the enforcement division. And then most recently, before coming here to Hogan Lovells, I was over at FinCEN. I was the interim head of their Office of Compliance and Enforcement, but I started off being the chief of the MSB and casino section.
Thank you. Great. So, interestingly enough, the vast majority of us here has worked in traditional finance before. Specifically, a large subset here has worked for Goldman Sachs. So, considering the fact that everyone here worked in traditional finance, what are some of the major differences or similarities as they relate to compliance and managing risk between crypto and traditional finance? Let's see. And this is a question for the panel, so we can start in any order.
I'll go ahead and kick it off. So the blockchain technology itself brings about a lot of efficiencies and consolidations. From a risk standpoint, there's in traditional financial markets, you've got quite a bit of counterparty risk when you follow the trade from the beginning to the end of the life cycle. There's quite a bit of counterparty risk with the blockchain. You've got that consolidation. But however, within the crypto industry, where I'm always, at least, and I believe everybody else within the crypto industry is always thinking back at how does this relate to traditional finance, right? It's the way I view crypto is that it's a maturation of the traditional financial industry. So you've had folks that were in the pits screaming and yelling, executing trades. In the early 1900s, we went to phone orders, electronic trading, and the next iteration, I believe, would be crypto. So you're always finding yourself drawing parallels and analogs back to traditional finance. There are similarities, there are differences. A simple example is, how does a hard fork get treated? How is that similar to a stock split? What sort of rules and regulations that apply in traditional financial industry apply to crypto or can be applied to crypto in a sensible manner?
Anyone else would like to on that?
Go ahead, Christine.
Oh, well, so for me, I spent more time on the regulator side, working in Treasury and Senate, and so just thinking about actually, approaching my work at Circle, really learning kind of backwards and starting with a beginner's mind with respect to traditional finance, I think has been very interesting. Learning kind of understanding new financial regulatory frameworks in the context of the crypto asset environment first, and then going back to first principles of banking regulation, I think has helped my team become really creative with the legal and regulatory solutions that we come up with.
So would you say that
Inverse.
basically, Christina and Yusuf, you mentioned the fact that there's a lot of similarities. Would you say that possibly cherry picking good regulatory rules that we already have tested in traditional markets would make sense for this, emerging newer economy, while creating newer, possibly more tailored rules for this, for digital assets?
Absolutely. We've got a proven model. The traditional financial industry has had a number of different crises over the last number of years, and rules and regulations have come about because of that. And those are lessons learned for the industry. We're not starting from zero. We've got historical events and regulations that can help inform how the crypto industry moves forward. I think everybody here agrees that the best way forward is to adopt and embrace regulation, but it needs to be sensible, thoughtful regulation. You can't pick and lift rules and regulations that were written in the 1930s, the 40s, or compliance BSA AML regulations written in the 70s, 80s, and amended in the 90s, and lift and shift them here. What's interesting is traditional financial institutions are also having similar challenges with, potentially what's a square peg round hole, where these regulations were written in the 70s and 80s, but due to technological advancements, are we meeting the intent and the spirit of the regulation in a manner that's different than just ticking and tying and saying, yep, we meet the letter of the law? But what I think is key here is, yes, there's past history, there's another industry that we're maturing upon that we can beg, borrow, and steal from, but apply sensible, thoughtful regulations to.
That reminds me of something. Oh, Greg, sorry.
Go right
That reminds me, during our preparation call for this, we actually prepared. Someone was saying how the regulators are trying to almost impose banking standards on a white paper, which was really resonated with me. Jeff, what do you think?
That was kind of my quote. Look, so we've all come from traditional financial services. We know what the expectation of a bank regulator or the SEC or FINRA is, and we're trying to build those, right? Whether that's a basic compliance program, an AML, and a BSA program. They've had decades of a head start, and we're trying to do this really quickly. And I think what's different is the speed in which we need to implement those as we're talking to bank partners and regulators. And as they're getting more sophisticated, the expectations on us to run a compliant program rises as well. But what I don't think we've done well as an industry is trying to think out of the box, right? What are the good things that blockchain can bring to this space, right? If I hand Yusuf $20, he doesn't know that I got it from Christine. But with Bitcoin, we can actually track where that Bitcoin's been. I may not know who had it, but I know where they've transacted, and through blockchain analytics, have they transacted in the black market? Are they with an address that we've already flagged? So what I want our regulator to do is think of how can we improve on Finance 2.0 rather than just be draconian and only look in blinders of what they're comfortable with.
Right.
Yeah, I think this is where I see some different. I've never done anything productive in my career. I've never worked for a financial institution. I've always either prosecuted them or no defending them. So with that said, I guess I'm kind of the platypus at the zoo on this panel. But I will say that going back to your very first question about traditional financial institutions, banks have been regulated since they were banks, and they helped actually draft those regulations. And now you have crypto firms, especially in this space, especially in the AML KYC space, that are introducing themselves into a regulatory regime that well predated them. And I agree with Jeff's point. I mean, to some extent, they're trying to, find their way in this path. But unlike the traditional financial institutions, they didn't have a seat at the table when these things were being drafted and when these things were being written. I will say, from the regulator's side, still kind of putting on my old hat from a couple years ago, there is a sensibility there that saying, look, don't build a car that can only go faster than 70 miles an hour and then complain to the regulators that you can't make us drive less than 65 miles an hour. That's an argument that won't work. I do think, though, and this is, I'll applaud my colleagues here, because they've been a part of these conversations with the regulators, that they are helping and I think really pushing the regulators to rethink their first principles and other ways of doing things where they haven't before.
So interesting, mention you're talking to different regulators, explain to them your challenges. Something we find at Solidus Lab, and I would love to hear your thoughts about that. We employ some advanced machine learning capabilities to our detection models, right? How do you, as someone who works with different regulators, how do you explain to them the nuance of your technological stack and the detection you use in order to find different abnormal activities, right? Love to hear that from you.
I think we're still in the first inning. I think from a regulator perspective, they're looking, do you have a trade surveillance system? Do you have a transaction monitoring system? How do you do sanction screening? They're still trying to figure out what's a virtual asset, what's a digital asset, let alone, right, can we use these, forward-thinking algorithms? So I'm not worried about that today, maybe a year or two from now. I'm still worried about, is there a level playing field that everybody needs to know that they have a KYC obligation? I think the fifth money laundering directive in the EU will level that playing field, at least for the EU. FAT is trying to put out their own proposals of, what should crypto regulation look like? We need to solve that first, and then we could solve the nuances of some of these, more bespoke challenges.
Yeah. Yusuf, you wanted to add?
I was going to say AI and machine learning are running into the same sort of challenges that the crypto industry is running into. It's but you get ahead with working with the regulators, educating the regulators, and going back to that square peg round hole. Yes, there's rules and regulations on transaction monitoring, for example, right? And you may come up with some new transaction monitoring rules based off of some AI machine learning, but the governance and the rules and regulations, the intent of those rules and regulations still meet we would still need to meet those requirements, right? The way we achieve that may be different. Like, yes, there may be some new transaction monitoring rules that came about because of your machine learning, but there's, testing, there's recertification, there's governance that you apply on top of it.
Sure. Yeah, makes sense. And, I think a larger discussion around the ability of the industry to speak to different regulators has to do with the different working groups that have been established. Christina, would you like to comment about how I think the industry is really working together relatively quicker than you can see in the traditional markets?
Yeah, I think to that end, many industry groups have been formed over the last few years, the VCA being one of them. Jeff and my company, Circle and Coinbase, most recently have been involved in an initiative that will kind of come out more publicly very soon, where we've also been trying to work to operationalize guidance that we've gotten from our regulators in order to sort of try and gain certainty for the industry. We want to make sure that we are sort of presenting to them and showing our regulators the capabilities that we have, the deeper kind of technical understanding that we have in-house, which enables us to sort of educate regulatory agencies that may not be thinking, required to be thinking about these issues 100% of the time, really in the trenches the way that we are. So we've been working with a number of other companies to put together sort of a set of just guidelines and a framework for understanding and operationalizing a lot of the guidance that we've seen from our regulators. And I think just having been in initial discussions and presenting that to them most recently, it's really very appreciated, not only from the regulatory agencies, but also from policymakers who are trying to understand: do you need legislation? Do you just need us to enable a certain agency to pass rules on a certain issue? So just kind of figuring out what the needs are, communicating our capabilities, and doing that as a collective group where we can all kind of corroborate each other's experiences and really speak with one voice, I think has been really productive.
If you watch the presentation on the Hill the other day, Commissioner Clayton's like, come in, we have an open door, we want to hear what your issues are, what your challenges are. So, Circle and us and others have embraced sensible regulation, and you can only do that through dialogue. A lot of it's education. A lot of it is trying to get them to understand we are a little different, and that's okay. And I don't want to steal thunder, but in a couple of days, maybe even tomorrow, you'll hear about some of the works that we've collectively put together to try and figure out what's a security and what's not a security. Absence formal guidance, we're forced with making our own decisions, but we've thought it through, and we came up with something that's less subjective, and we've met with the regulators, and they like it. So more of that collaboration, I think, is what this industry needs.
Do you also do that on a global level? Do you, obviously you're serving client base that is global. How do you work those kinks out?
I mean, we talk to every regulator, whether that's the FCA or the MAS. They're mostly interested in understanding what it is that we're trying to achieve. Some regulators are a lot more forward-thinking than others. I think in the U.S. we're playing catch-up. And we heard from various commissioners that we don't want innovation to leave, but we need to figure out a way forward, otherwise it will. I want to figure out a way that it can work here as well as on a global level.
Right. Greg, I'd love to hear your thoughts about this, walking hand in hand with different clients in global settings. Whether or not do you think also the U.S. is incredibly behind, is about to catch up?
I think I agree with Jeff's comments and also Commissioner Pierce's comments this morning of there is a real risk the U.S. gets left behind. I'm kind of, frankly, I'm agnostic about the sandbox, the benefits of sandbox in some areas, like money laundering and terror finance, as opposed to registration and disclosures. There's kind of different topic areas for that. I think ultimately it's in everyone's interest, industries and government interest, to have common standards, especially on things like, and that's why I do, although I don't agree with all of it, even the FATF statements regarding the travel rule and things like that, those are efforts to ensure that, especially U.S.-based institutions that are in cross-border, who is not in a cross-border environment now, right? Won't be prejudiced by having some other entity not subject to those same rules for those same interests. And by the way, as Joel said during the last panel, this is not just one investor losing money. This is when you talk about securities offerings, you're talking about market-wide significance. When you're talking about money laundering and terror finance, that's when things go boom, or when illicit finance runs through the financial system. So it's not just a singular event or a singular prejudice that the regulators and my counterparts on this panel are interested in addressing.
Yeah.
You bring about a good point. Not only is it consumer protection mechanisms and maintaining market integrity, if we can demonstrate that to the very same regulators that regulate the institutions that are still coming to the crypto industry, that's a really good story. We're working with the likes of the SEC, the CFTC, and informing them of what right size regulation looks like for the crypto industry. And if we can successfully convince them and alleviate their concerns, that may in turn loosen up their stance in the same institutions that they regulate to come into the markets.
Right. So, compliance is a messy business, right? All the way from user onboarding to transaction monitoring, market surveillance, regulatory reporting. Yusuf, as head of risk for Gemini, what's the one area that today troubles you the most?
I think all of the ones that you mentioned are important, right?
Yeah.
They're varying levels of importance. But the easiest one to pick apart is market integrity, market surveillance. And the reason why I say that is that the CFTC, the SEC have made public statements around the market needing to get a handle around market surveillance and a number of different things. I know in September or the summer of 2018, the SEC had delayed their decisions on ETFs, indicating a number of concerns, but one of them is market surveillance. I think what's key here is consumers that are coming into the crypto space, whether it's retail or institutional, they deserve the same levels of protection mechanisms that they're afforded in traditional financial markets. With regards to market surveillance, being able to, this is truly a global industry. Because of the technology, Think about the analog for if you need to go ahead and execute a trade on the New York Stock Exchange, for example, you have to go through a broker-dealer. You have to be a registered broker-dealer. Then you've got the depositories and clearinghouses on the other side settling the trade, and it's T+3, T+2. Now, what happens there is, the U.S. has about 13 exchanges, and you can have FINRA, right, mandate that broker-dealers provide an end-of-day trade file for purposes of cross-market surveillance. Different in crypto industry because you can perform trades across exchanges that are dispersed across the globe and have different regulatory regimes, the regulatory regimes that are still trying to be figured out. So being able to provide some sort of a mechanism for cross-market surveillance is a key focus, I think, of the industry and a key focus for the regulators. This way you can identify bad actors and take the appropriate recourse.
As we know, bad actors, generally speaking, would perform their malicious activity on numerous different venues and on one, right? Jeff, where does that meet Coinbase? That one challenge that is keeping you up at night?
So I agree that market integrity is important for the institutional customers to come to the space. They need good transparency and price discovery. But I think we are playing catch up. That there's still a misnomer that crypto is used for bad guys all the time, right? Or that privacy coins are only bad. The most frequent question I get when meeting with a regulator or a bank partner is about AML. So I think we need to solve that and be able to demonstrate that the surveillance we're able to do is as good as the traditional markets, and in many cases better. And that's the first hurdle. And I think there was just a publication the other day that 97% of the bad actor activity happens in the unregulated exchanges versus the folks that are trying to establish the right framework and do it in an above board way. So I think it goes back to my first statement of we need a level playing field that everybody's subject to, and then the regulated exchanges can thrive versus unfair competition on a global scale.
Right. Christina, I think you mentioned in our call as well the difficulty in doing different regulatory reporting obligations, especially as it relates to the fact that Circle is trying to serve a client base that is in a global setting. I'd love to hear more from that.
Yeah, I think one of the biggest pain points, and just operationally, something that takes up a lot of time and resources is a lot of the regulatory reporting we have with respect to the different jurisdictions we operate in, especially as a money transmitter, where we have, in 49 states, because Montana doesn't regulate money transmission, so 49 state licenses and a BIT license, you have to file a report, and many of the states have joined this kind of nationwide licensing system where you can file a uniform report, and there's been a lot of effort amongst the state banking departments to really improve coordination on reporting on examination, but it still remains that each banking department needs to get comfortable with your business in order to give you a license, in order to approve changes to your business plan, in order to review your financial statements and ensure that you have the customer assets that you say you have in the bank at the end of the day or on the blockchain. And so all of those different requirements, and not to mention an annual exam for each state, it really makes it costly for a business to operate, and I think it sort of makes it difficult for smaller businesses and for innovation to occur in this country, and the more jurisdictions and the more differing reporting requirements that just can exacerbate. So that's been a pain point, but also there definitely is effort, and the states have over the years gotten smarter and asked more questions and learned more and are getting more comfortable with crypto assets, I think.
That makes complete sense in my eyes. I think that up until now, we don't have a whole lot of time left, and we spoke about the different issues that this industry has, the different complexities and nuance and subtleties. We'd love to also hear from you about what are some of the solutions, approaches, philosophies that you enact in your day-to-day in a company to make sure that you are working the best way possible, enacting the best practices with the regulatory uncertainty. How do you navigate that? We'd love to hear from Jeff.
Sure. Look, we're in it for the long game, right? We've embraced regulation since the beginning, but we want sensible regulation, and we're gonna play out that strategy. And sometimes it's unfair from a business perspective, but we think for the whole ecosystem to grow, that's the way forward. And good competition is good for the ecosystem, right? We like others coming into the space. It gives validity to it. So from a philosophy perspective, that's our way forward. That said, the other challenge is educating the regulators, right? We brought up the travel rule quickly. To me, that really is a banking regulation on a white paper. The Satoshi, thought of a decentralized system did not contemplate the travel rule. And we're going to take a couple of steps back. I get law enforcement's challenge that this is gaining speed, and they don't want to play catch up to find the bad guys. But there are a long list of unintended consequences of trying to apply those standards, and whether that's a cyber hack of PII information that keep me up, and I'm trying to educate FATF and FinCEN. Be careful what you ask for versus giving the industry time to develop something that continues to help law enforcement, but moves what this space brings from a different aspect.
Yeah, Yusuf.
Yeah, I definitely echo those comments. From a Gemini standpoint, trying to meet the highest bar, there is regulatory uncertainty, but you can figure out, what is a pretty good level of regulatory compliance? What sort of licensing should we go for? Should we get a license type A versus a license type B? Continually working with the regulators, educating the regulators. And unlike, we've got regulated exchanges on the panel here, but not playing regulatory arbitrage. You want to have a great relationship with the regulators, because you know what? The fact of the matter is that this industry is new to the regulators, and regulation is new to the industry, and we both need each other to learn from each other and make sure that we have appropriate, sensible, thoughtful regulation. From the VCA standpoint, there's no shortage of associations within traditional financial markets. They all play different roles. There's think tanks, there's lobbying organizations, there's standard-setting bodies, and then there's self-regulatory organizations. Same is the case for the crypto industry. And what the Virtual Commodity Association is trying to do is get like actors to implement what are going to be standards, but eventually the hope is to become designated an SRO by a regulatory authority, sponsored by a regulatory authority. You need an act of Congress to be designated an SRO. But providing a mechanism by which people can comply with cross-market surveillance, the travel rule, other BSA AML requirements, custody, and the key thing I think that interests a lot of the regulators is, great, you've got all these standards, you want to have them turn into rules and regulations, but one of the committees within the Virtual Commodity Association is enforcement. So how can we be the extension to regulators to enforce these standards? So being complementary with regulators is key for the VCA.
So I'm hearing a lot of advocacy work, right? That's one of the philosophies or action items you're taking. Christina, we'd love to hear also from you. It's the same, if it's the same kind of advocacy role that Circle is taking, but I would even push further, right? I want to hear more about what are some of the meetings you have with your engineering team and product teams that are coming to you and shouting at you, we cannot do this thing, what regulators are asking us to do. For your advocacy, this is literally impossible in this space and what we're trying to accomplish here.
Yeah, there's always going to be a tension, I think, between the business and the regulatory requirements. The business always wants to innovate and create more, and the regulators and us as legal and compliance, we want to also make sure that our customers and investors are protected and that the goals of the regulation are achieved. So that tension is inevitable and I think healthy. Part of it is both educating our regulators about our technology, also educating our business leaders about really the regulation and the purpose of them, and sort of working with them to find the best ways to implement lean solutions that are comprehensive in achieving the regulatory goals. So I would say just really having a good dialogue and building trust with the rest of our business is really important. From a legal perspective, we really focus on having process. And so having, documenting a process of how we're making decisions, how we're analyzing regulatory issues. If we can't always be knocking on the door of NYDFS or the SEC or whoever it may be, we try to have a very good dialogue. But in the meantime, we always want to document and kind of put in writing what we're thinking about, why we're thinking about it, and just try and build credibility for the industry in that way as well.
I'm going to push even further, right? So we're all here to some level startups trying to create technological innovations as it relates to digital assets. But it sounds to me like much of the resources are being allocated to advocacy, legal counsel, convincing them that the tech teams are actually doing their job right. Jeff, I'd love to hear from you.
Yeah, so we are a startup, but we're 800 people, and 10% is devoted to risk and governance. And when I first joined, I looked at the company. I'm like, well, where are we on this journey? And the first thing I did was, well, if it isn't written down, it doesn't count. I've been through many a FINRA exam. I thought about it, but I didn't write it down. Okay, so we went on a journey to create a policy framework, right? All the good work that we've built over the years, how do we document those processes and controls? The second thing is we invested more in technology, right? What are those surveillance needs that I need to meet the hurdle of a regulator? But the most important thing is a risk governance process that Christine was alluding to, where at a fintech or a crypto company, right, they're run fast, break things. But when you're trusted with people's money, you can't always do that. You can't do an MVP launch of a broker-dealer. There's a rule book to follow. So it's finding the right balance of keeping innovation going, letting the engineers develop new, interesting products, but letting them understand what their risk-reward challenges are and what the expectations are. And if you're at a firm that wants to embrace the regulation and figure out a way forward, those conversations aren't as hard as you would expect. However, they happen a lot more frequently than they expected. And when I first got there, I'm like, well, where's your risk committee? And they're like, well, we don't really do committees, right? We're about bureaucracy, breaking. But the reality is you need some of those disciplines. And so we actually have one of those risk meetings or working groups where we actually get to weigh the pros and cons. And I get to educate the firm, and they also get to give input on, okay, could we do it this way or could we do it that way? It's really about finding a way forward. In the earlier panel, they were talking about there's no one on the panel that wants to say no. We have flexible risk needles. We're there to try and figure out a way, yes, but with some controls.
Right.
And I think that's important. That's like the healthy approach to regulation, right? And the regulators. So when we were, so my firm and my partner Jim McGovern and I represented Ether Delta, the founder of Ether Delta, that had the settlement last year. And even in that enforcement context, having that kind of back and forth and that discussion with, at the time, the SEC regulators, that was helpful for us. I think it was helpful for our client. It was definitely, I think, helpful for the SEC. I won't speak for them. But I think it was, based on their feedback to us. And I think ultimately, there's not if a company is not going to be looking to comply with the law, if they're really hoping to just ask for forgiveness later or really want to break bad and, hey, we're gonna seek to move illicit finance through the system, they're not going to show up on panels like this. They're not going to register as an MSB or as an exchange, or whatever their appropriate regulatory framework is. And ultimately, I think, as a former regulator, I would appreciate that. And I think most of them will, even at the point where they disagree. One other point, just because I think Jeff and I aren't on the same page on the travel rule, I will say this, that many of the companies in the space are basically taking their approach to things like, even these regulations with which they disagree or think are inappropriate or are applying, 1990 standards to a white paper. Okay, that may or may not be true, but I think that many of the companies in this space, probably including all of yours, are basically taking the approach of, it's still going to be a fixture. We're going to science the hell out of it to figure the way to comply with it in ways that banks and traditional money services businesses and traditional broker-dealers never envisioned. And they're probably going to be the ones to succeed at that, frankly.
I'm trying to uncover here frustrations, asking how is your engineering teams even, are being so understanding of the fact that most of the company, not most, but a lot of the company's resources are allocated towards the regulators, not making it easier on me. But so, Yusuf, I'd love to hear from you also about this, question.
I think it's culture tone from the top, right? Regardless of what group or department you're in, if you are embracing regulation, regardless of what role you're in, you're working and marching towards the same goals, right? What's interesting here is, what other startups have risk committees, right?
Right,
That's,
exactly.
That's been a new thing for me. It's like, oh, a startup has a risk committee? Why do they care about risk? The other thing is that, with the focus on risk, we are, in traditional financial industry, regulation is a knee-jerk reaction to a crisis. This is the industry working with the regulators ahead of any sort of global crisis.
Right.
And I think we have a lot of good faith and relationships with the regulators to make the right decision.
Right. So we have just a couple of minutes left. We wanted to open the floor for any possible questions from the crowd. I think our microphone is back there, or right here. Oh, here. So,
A lot of questions.
yeah.
I actually have two. One is related to the travel rule. And in the U.S., we have a $3,000 threshold. FATF is saying $1,000. What kind of implications? It doesn't seem like the U.S. is going to go to the $1,000 anytime soon, but what kind of implications does it have for your operations globally, the fact that you've got this two-tiered level? My second question is related to stablecoins. It is an ever-burgeoning area. I know you say you've got something coming out shortly on, definition of security, how much that is going to touch upon the stablecoin world, and how does that sort of fit into it's a new dynamic for this entire market?
I'll take the first if you want to take the second. So, the 1,000 versus 3,000, I think the FATF is trying to help law enforcement and give them an audit trail, right? So they can do investigations, and that's great, and we want to be able to do that. But I think the first thing we need to do is figure out a governance model. Do we want a decentralized solution? Do we want a centralized solution? Do we want to empower a third party to be able to handle and process all of that data? And I think that's, through the GDF, we're hearing a whole bunch of presentations and trying to come up with that framework. Because the worst thing is if we build 5 solutions and then law enforcement's job is even harder, or we get it wrong and we end up driving more peer-to-peer transactions, which law enforcement has no transparency to. So I just want to make sure that we get it right. I think it's important for the ecosystem that we keep the bad actors out. But it took 9 years for SWIFT to come together, right? They're giving us 9 months. That's a challenge. Luckily, we have some really smart engineers that are getting engaged to go, hey, we can come up with some solution. We can figure out how to share the keys and unlock this information. We just need to do it smart. And stablecoin, I'll let Circle talk because they're the minters of our joint stablecoin for now.
Okay, so Circle and Coinbase within the last year launched the Center Consortium, which is this stablecoin network. It's a multi-issuer network, which is what makes it kind of different from other stablecoins, called USDC, US dollar coin. And so it's a fiat-pegged stablecoin, and so I'll speak to that type of cryptocurrency. That won't really show up in our securities work just because the expectation of profit prong of Howey, right? You don't have really quite the securities concerns around a stablecoin that's meant to just stay pegged to the dollar as you would for some of these other algorithmic ones or different types that we're seeing. But really where the regulatory issues have come up and are really interesting, I think, are around what is this thing? It's really a digital representation of fiat currency. And so where you have regulation already in place for stored value and Visa gift cards and that type of instrument, why not regulate it under that sort of framework that already exists for stored value or prepaid card type of technology versus, well, okay, this is on the Ethereum blockchain. Should it be a bit licensed activity? Should each issuer have a bit license, or should the consortium, the nonprofit entity that doesn't actually custody stablecoins, but that actually kind of administers the network, should that be a licensed entity and ultimately have obligations under different money transmitter or FinCEN regulations? So those are a lot of the issues we're thinking about, and they also manifest themselves on a state-by-state as well as the global basis as we see the FCA looking more at stablecoins too.
One more question.
Hi, how are you? I'm Nick Passarelli with LGO. So I also came from the traditional Wall Street side, and I'm very like-minded with, say, Yusuf and Jeff. I think one of the biggest challenges that we're facing within the industry are the philosophical differences between two sets of people. One, from the traditional Wall Street, and two, more from the Silicon Valley tech mindset. I find that, for everything that, say, Yusuf and what you guys are doing, trying to create these associations and collaborate with the regulators, you've got the defend crypto movements and people going on Twitter saying, screw the SEC, and so on and so forth. So for me, I guess the question I have for you guys is, what have you done and kind of what have you guys done to kind of help educate people who aren't from that traditional regulatory or regulated side and kind of meet in a common ground?
It's continual. It's forums like these, right? It's the conversations with peers that happen in various different ways. And I think maybe a couple of years ago, I definitely did see that divide, and there were folks that were very vocal about it, and there still are today. But I think what you're going to see is folks that have embraced the regulation first mindset will be leaps and bounds ahead of any other exchange or custodian that hasn't taken that standpoint. Then there's going to be a significant compliance burden once it does become regulation for these unregulated exchanges that are now looking to become regulated. So it becomes a business viability play for these unregulated exchanges. And the sooner they realize that, the better it is for them, but it's also better for the entire industry and the market.
Yeah, we've had that same debate. We've had the Bitcoin purists that were there early on. And then we've had an internal debate, are we a crypto company, a fintech company, or a financial services company? And the answer is we're a little bit of both, right? We're trusted with, custodying people's money, right? So we have a responsibility to that. And regulation is one of the ways that we can get the ecosystem to grow. So we have those internal debates, but I think we're collectively on the same page that we need all three to work together for really to be successful.
Yeah, I agree. And so with that, I'd like to thank our panel. Thank you very much for being here.